Welcome in, everybody. Hi. Appreciate y'all stopping by. My name's Andy Zoo, if you guys haven't caught me live before, and I am going to try to record this right this time. I talk about real estate, money, finance, stocks, Bitcoin, cryptocurrency, whatever you guys want to learn about. I'm trying to discuss today how to get started investing and just kind of the overall investing mindset, looking towards the future of money, where we're going in the world. So that's what this thing is here for today for. I'm going to make sure this is actually recording this time. I was supposed to, hi, Yablanas, Yabalana. Hello, nice to see you. I was trying to record this video yesterday, and if anyone was here yesterday, I said I was recording it. I literally recorded the whole thing, and there was no audio. So I'm very smart. But anyway, here to talk about anything you guys want to ask me about today. I have a lot of opinions, and I like to share them with you guys. So that's what the goal is for today, right? We're talking about stocks, we're talking about cryptocurrency, we're talking about how to get started investing, we're talking about why you should be investing. Hi, looking for you. Hi, party mama, nice to see you. I appreciate it. So I'm a little bit late today. I'm potentially buying a property tomorrow, so I was staying up late underwriting it for my financial partner, being my dad, in order to see if I want to actually buy it tomorrow. So that's why I was a little bit delayed today, but here I am, ready to talk about whatever you all like. Kind of in terms of overall stock market today, I mean, there wasn't a lot of news. It kind of traded slightly lower to flat. And this is kind of what we've been seeing over the past few weeks, right? We've been seeing since last week when we had that high of the interest rates, I'm sorry, not interest rates, but rather bond yields, right? When we hit a peak of bond yields last week at 1.6%, that's kind of sent this market into a holding pattern. And I wish we had these videos recorded and on my YouTube so I can call for receipts. This one I'm trying to record them now. But literally, I was saying last week that I was expecting us to be trading sideways in the stock market and cryptocurrency too as well for a while. And that's because essentially, I think no one's really come to a conclusion of, are we entering a new bull market as the bull market resumed? Have we entered a bear market? Nobody really knows at this point. So we're kind of going up and down 1 or 2 percentage points and everything every single day. And that's kind of where we are. And this is a philosophy that I've been trying to work on and nurse for some time, is that a lot of people talk about how Bitcoin and cryptocurrency is a hedge against inflation and it's a hedge against other investments, right? But here's the thing. I'm an S&P. What should move to? Look, Mark Freeman. Let me say that I think over the long term, it is easiest, and I think it is probably the most prudent for the majority of people to actually keep their money in the S&P. I put money in on a recurring basis into the S&P. Hola, papacito Ruby, te extrañado, amor. I think it's prudent to be putting money into the S&P on a regular basis, and that's because generally over time it's always going to go up. So if you're doing things like dollar cost averaging, and that essentially what a dollar cost averaging means is essentially, let's say you put in $100 every single week, right? And it goes up and down and up and down, right? Sometimes when it's higher, you'll buy less shares. And sometimes when it's lower, you'll buy more shares, right? And that's how dollar cost averaging works. So it ends up being you buy more when the market is down and you buy less when the market is up. So you end up having kind of better things over the long run, right? That's kind of the investment portfolio and a thing that I like to advise most people to do, because it's kind of a lot of work for the average person, I think, to be picking an average stock and trying to decide every single stock that you want to be going in and looking at all the time. I believe it was Mike who asked that question. That's someone said Chattanooga. Hello, Chattanooga. So, or Mark, was it? So that's kind of what I would say for right now. I'd say keep your money there. I think it's going to be doing good. I think over the long run, unless you're specifically all in on a new stock that you've done a lot of research on, your energy is so bright, Yabalana. Thank you. I appreciate it. Unless you're really confident on something, you've done a lot of research on it, I wouldn't necessarily say go to a specific stock yet, because this is something that what is top stock right now? I need to invest and I haven't invested yet. Houston, Texas. See, I'm not the guy to be saying to recommend stocks. Really, I'm not. And the reason is that there's a lot of people out there who do that already. There's a lot of people out there who have their own agendas. They have their own positions. They say, here's all the stocks that you should be investing in right now. It's going to make you a lot of money. I am trying to be kind of a person who say, I want you to be investing, but I want you to be looking at and understanding the analysis behind why people are trying to push you into things, and why, and if that's going to be good for your portfolio, and if that's going to be an actual sound amount of analysis to really help you in the long run. Because there are plenty of people to recommend you stocks. This is just where I am, and I feel personally. I just don't personally feel super comfortable saying, go buy this, go buy this, go buy this. The only thing I will say to go buy is that I'm biased because I'm a real estate guy, is that I encourage everyone to buy into real estate. But saying buying real estate is just like saying buy any stock. There's a lot of things up and down. Annie called the doctor, says, hey, hello. Nice to see you. Thanks for the feedback. Houston, Texas, okay, I got you. Yeah, I'm sorry if that doesn't really help, but that's kind of, I like to explain that philosophy there. Nice jacket, where did I get it? Oh my gosh. I think this is a Kenneth Cole. We buy a lot of our stuff from discount Macy's rack. That's the majority of my clothing. I don't know, it just says weatherproof. I buy a lot of my clothing from a discount Macy's rack, so sometimes I end up with a nice piece because it's discounted and it's the last one. Real estate in the stock market. Yeah, absolutely. How do you buy into real estate? Where do I recommend to buy stocks nowadays, broker or online? So Donna Ray, let me answer that question first, and then I'll talk about real estate in just a second. Buy stocks, I think the best, you don't want to necessarily be using a stockbroker to pick everything for you anymore. I think that's kind of a thing of the past. Look, if you want to be using someone else to pick things for you, I think the best thing to do is invest in index funds like the Vanguard Index Fund, or you can invest in Fidelity's index funds or ETFs that have chosen a specific sector. Like I have money, for example, in the FSLEX, Fidelity, Energy, like kind of future-oriented energy index fund. Why? Because I don't always have the time to be monitoring every single stock, and I just kind of want to be in the future renewable energy sector in general, and I'm willing to lose some potential gains to just make it easier for myself and be in there. Otherwise, I would recommend, if you're wanting to get into specific stock trading, I would recommend you get into download an app like SoFi or Webull or Fidelity and Vanguard, and then just directly trade on there. Great outlook. Thank you, Afish Global. I appreciate it. So in terms of getting into real estate, the best thing for you to do is to call some real estate agents. Buying the Fidelity monthly installment is a good idea. I think so. I think a lot of the Fidelity ETFs, a lot of the Vanguard index funds, I think they're pretty safe over the long run. And here's the reason why. No Robinhood, Brassy Jr. Look, if you have your money in Robinhood, that's fine. I'm just anti-Robinhood on this channel because what they did to GameStop, some shady stuff went on. I would rather not support their business because, and I've explained this before, but I'll explain it again. So when they shut down trading in GameStop, it's because they ran out of money, or it's because they cowed to the big hedge funds. So it's either A, they ran out of money and they weren't able to fulfill your funds. Brazzy Jr., thank you for the presents. I appreciate you, my friend. It's either they ran out of money and they weren't able to fulfill the funding orders of the clients, me and you, and they had to shut down trading, or they're actually bought and sold by the hedge funds and therefore they're a bad company and unethical. So it's either kind of an either or for me. Yes, they have raised a bunch of money since then, but I mean, I don't want to reward a company for doing bad practices. That's just kind of my general idea there. So that's, they lied either way, exactly. Robinhood stole from you, Ruby? Oh no! See, people were forcibly closed out of a lot of their positions in Robinhood as well. There are things that badly went on. What are you using now? Robinhood, the corner store of trading stocks. Clown. Absolutely. That's kind of what I think. Look, if you have money in there, if you have your portfolio in there, you can move your portfolio other way. Trader Pokemaster, I appreciate you, my friend. Gotta catch them all. Absolutely. So, but I think that if you have your money in there and your portfolio in there, you don't want to close out of it, that's fine, right? You can pay a fee to transfer your portfolio to other brokerages. You can do that. But if you can close out, then I would consider closing out. I do want to answer the question of people who were saying wanted to get started in real estate first before we go back to some of these other questions. for real estate, the best thing you can absolutely do is connect with somebody in your area who is already investing in real estate and ask them questions. You can, buy them lunch in a non-COVID era, or if you're in Texas, apparently you can do whatever you want. But you can buy these investors lunch, pick their brain and try to learn as much as you can from somebody in your area, because they'll know a lot better than me. Because I live in Nashville, I understand the Nashville market, but I don't necessarily know your market. And see how they invest in rental properties. How are they doing these flips? Like, this is what you want to be learning from, and the best way to do it is go direct to the source. People who are doing it, who are agents who sell those properties, and they want your business, right? Agents want your business, and investors always want more deals and more money. So if you have money to invest, they will talk to you. If you have the ability to do a deal, they will talk to you, and they will teach you and try to hold your hand. And the best way to get to them is to Google My City Real Estate Investor Association or My City Real Estate Investor Network, and then you'll be able to find these people. When am I buying you lunch? Someone 330. Look, I'm trying to share as much as I can here for free, y'all. So hopefully that helps all of you. What do I consider? Let's see. What do people ask? It's been forever since I saw you. When am I buying you lunch? Someone, I appreciate it. See, look, this is what I get now that I have this thing up here on my computer. I can actually look more up in the chat. Jivo, Tark the house. Okay. So someone asked about Doge. Doge has to wait. Tark the house has been asking me about Jivo for the longest time. So I need to talk about this, right? Justin Phillips, travel stocks and airlines. Let me get back to that. But Tark the house specifically has been lobbying me to look into Jivo. I did look into Jivo, Tark the house. So Jivo, for those who don't know, I think it's been picked up recently as another meme stock because it's in the renewable energy sector. And what they do is essentially they're doing biofuels for jet airlines. Is kind of the whole idea, is that they can, because they use, they're not carbon reducing carbon, but they're carbon neutral, right? They take like waste products and then they burn those things that were already going to go back into the environment, and they turn those into jet fuel. So that's what Jivo does. And so this is my very basic analysis of Jivo. I think that it's a company that has strong potential, but it's a very risky play. It's like either it does really, really well or it flops and really crashes. And that's kind of the risk you're taking a lot in a lot of these companies, because obviously they have a $1 billion plus market cap, but their revenue is like very, very small, right? So this is something to be looking at. But what are the reasons to be bullish on Jivo? I was reading that they have, for example, a contract with Norwegian Airlines to be buying, I believe it's 100 million barrels total of their, renewable jet fuel. It's Norwegian or some sort of Scandinavian country, right? It might be Sweden. I'm not sure. I can't remember off the top of my head. And this is why, in general, I think that the best thing to do is learn how the process of how I would break down a stock like this. Neo got hammered today. Yeah, Neo's not been doing very well. How do you break down a stock like this? How do I break down a stock like Jivo? I'm looking at their contracts. So I'm looking at their contracts. They have a $100 million contract of oil barrel. So to sell their jet fuel, to sell their biorenewable jet fuel. Okay, how much is that costing? How much are they getting per year? When is that coming online? What is that total potential market share? So then I'm looking up, okay, they're getting a $100 million barrel contract over 5 years, but people burn 1.5 billion barrels of jet fuel per day. I believe that was the number that I looked up. So if I look at that and say, what is the potential share of the market that they're going to go in there? What are people looking at there? And when do I think, is it going to be at price parity? Is it going to be better than oil? What am I looking at the oil industry? I'm going to look at the oil industry, for example, I believe it's the American Petroleum Institute. It's yesterday announced that they are actually supporting essentially a carbon tax on oil. The American Petroleum Institute, guys. This is literally the lobbying group, number one lobbying group for oil. So does that make me more bullish on something like Jivo and this jet fuel? Yes, but I want to try to figure out, when are those carbon taxes potentially going to come into play? And if literally the American Petroleum Institute is supporting it, it's probably going to be coming at some point. So that's all these sort of factors that I'm going to be taking into mind. Is the risk reward return good enough? So I'm sorry I don't have a better deep dive into the financials. I was only reading about it for a couple hours, but this is the type of work that you need to do if you really want to be more sure of a stock, is to do this really in-depth type of work. Where's the industry going? What are they doing specifically? Do they have any sort of advantages over other people in this space? This is all things that you want to be doing. Didn't know that about Petroleum Institute. Yeah, I believe it's API. So that's what I'm talking about. Gush USO. I don't know about Gush and USO. XRP to the moon. Oh my gosh. Y'all, I do not recommend personally. Okay, Doge. I don't trust oil. I like your chair. DX Racer, my friends. Buddy said only a couple of Papa where should move your stock? This is easy to use. Where should you move your stock? If you're in Robinhood, you can move it to SoFi. I believe you can move to Fidelity. You just have to Google how to transfer to my stocks to a different brokerage from Robinhood. That's where you're going to be wanting to look that up. So, hey Andy, have you had a chance to check out MJNA, Living La Vida Crystal? I have not. I'm sorry. That's going to be written down right now. Watch, I'm writing. There's a lot of things. Medical marijuana, it looks like it's an over-the-counter company. Yeah, I don't know much about these over-the-counter companies. I would just say, in general, an over-the-counter stock, guys, is a stock that is essentially not regulated by the SEC, and there's a lot more chance and risk of pump and dump. Looking at it just briefly, it looks like this MJNA company spiked to 17 cents around the second week of February, which is when the second wave of the meme stock revolution came into play, and now it's been falling since then. Unless I would say that this play, just based off this 1 second analysis, looking at it, I know all these things were happening at the same time period of the medical marijuana stocks. Ruby, thank you for the fires. I appreciate you as always. When this was happening at all the same time during that meme stock revolution time. So that's what I would be looking at it as mostly a meme and momentum play. And I don't know enough about it for the fundamental long-term aspect of the business. But I think once the meme momentum energy dies down, it's not going to have as wild of a ride. And you have to look at it the fundamental business. So these are the types of things you have to think about. Because look, something like obtaining 1,000 rental properties in 15 years possible, definitely possible if you count doors and you're doing apartment buildings, absolutely. But that's, if you start now, you can get there. You can get there. So need to check what software company started Discord. It's crazy with all these memes. Yeah, if you guys want to keep up, see, this is what I've been saying this over and over again. It's dangerous to be the second guy in or second gal in to the momentum swing trade, right? If the momentum is already happened, you go to the news, you read that GameStop is up another 100% randomly, then you're probably already too late. Because what you're going to be investing at that point, you're investing with all the FOMO investors, the fear of missing out. Because, oh, it went up 100% yesterday off of no news just because of pure meme energy, then you're going to be the second guy to the party. And that means you're way more likely to lose money. Like, the first guy is always going to be the person who makes the most money. So you want to be that first guy if you're trying to play these momentum meme stocks. But the only way to be that is to be so active in Wall Street Bets, in Reddit penny stocks, and all these Discord chats, that something I specifically don't do. I don't have the time to do it. But if you have some free time and you don't mind kicking around in these Discord chats and reading these forums, and you can do that all day, you can get in on these meme stocks and meme energy and make a lot of money first before other people. But it's dangerous, right? And that's kind of what, someone asked about Doge earlier. I'll say this before and I'll say it again. The problem with Doge is that compared to the other cryptocurrencies, is that all it offers to you is meme energy. When you look at Dogecoin, it only offers meme value. There is nothing else offered in terms of, does it have some sort of special technological play like Ethereum, like a Cardano, like a Polkadot, like these other cryptocurrencies? No. Is it used on some sort of exchange platform like Binance or crypto, a CRO token? No. Is it considered by institutions as a safe investment like Bitcoin or maybe Litecoin is? No, right? It is nothing but meme energy. So it is very risky for you to get in off meme energy alone. If you believe in the meme, if you believe in the community, you can put your money in there, whatever, that's fine. But I wouldn't put my money into Doge expecting that you're going to be making a lot of money in the long term. It's more of a shorter term play. Then that's what you have to think about. Momentum, meme, stocks, and trades are always short term. And then, but you also want to think about where is this stock going long term? Where is this coin going long term? In case you mess up on the meme momentum play, you someone announced it today. You're going to be able to use Doge to buy coffee, buy food, a car. Willie Hess, maybe so. See, that changes the game. I haven't heard anything about that, but if you are, that makes it different, right? That allows more people access to Doge, right, and have it to be able to be used and converted into something. That gives it a little bit more credibility. But essentially, Dogecoin is right. The problem with Dogecoin compared to other cryptocurrencies as well is that the reason why the bigger cryptocurrencies are getting so much traction is because institutional investors, the big guys with all the money, Tesla, MicroStrategy, whoever, are buying Bitcoin, right? MasterCard is getting into Bitcoin. Everybody's getting into Bitcoin. Square and PayPal getting into Bitcoin, right? You have to believe that they will also buy Doge. And maybe Elon Musk will do it. And we can, and everything, and you can buy Teslas with Dogecoin. Maybe so. But I have a hard time believing that 20 years from now, even when cryptocurrency is more adopted, that the guys in the suits on Wall Street are going to say, let me buy $1 billion of Dogecoin today. For some reason, that's hard for me to believe. If you believe differently, that's different. They said that the stock market is all over the news. Don't buy any crypto, but Bitcoin is your best bet to buy for the long term. I tend to agree it's going to be the most safest because it has the most money in it. Just by that's the thing. Just by the virtue of having a lot of money in it is going to be protecting it over compared to a lot of other cryptocurrencies, because the people who are in it are going to try to make sure they're not being falling out. And that's the difference between today, 2021 and 2017, is that we now have real institutions with real money buying it up. You have people like Grayscale, the Grayscale Bitcoin ETFs that are buying up the majority of all new coins mined. What about UWMC? Caught out in January for the same price today, ready to pop, meme stock? UWMC, I'm not sure. Caught out in January for the same prices today. Something to take a look at for sure. Let me write that down over here. I don't want to use this computer because I'm trying to record my video on it. What's my thoughts on CCL? I'm not sure what CCL is. Let's see. Worthless is, where would you recommend to Polkadot and ADA? I would recommend Polkadot and ADA. ADA, for example, is Cardano. And Polkadot and Cardano. Trader Pokemaster, thank you again for the presents. Gotta catch them all, as I said before. How many stocks should someone have in their? Let me answer this question, and then we'll talk about Polkadot, Cardano. How many stocks should one have in their portfolio average? So here's what a traditional financial advisor might say, and if you go Google it, you can look it up, and don't just take my word for it, right? A traditional financial advisor would probably tell you that you want to have about 30 to 40%. And it might even be 50% of your money in stocks and about 50% of your money in bonds. And that's usually what they've been saying for the longest time. The problem is now bonds are kind of useless. So bonds don't give you any money, and they lose money to inflation over the long run, right? So that's Slow Trolling. Hello, what's up, my friend? But I think for the average person nowadays, this is where I'm trying to move my portfolio, and it matters for you. I'm trying to move my portfolio specifically because I have expertise. I have expertise in real estate. It's my job, day job, to be in real estate. To 50% to real estate, 25% to stocks, maybe 30% to stocks, and about 10 to 20% in crypto. That's where I'm trying to move my portfolio. Am I anywhere close to that? No. My portfolio currently is like 90% in real estate because all my money is in this one rental property that I own. That's where almost all my money is, and less than 1% is in cryptocurrency. And but that's where I would try to be for me personally, just because those are what I believe. Trader Pokemaster, thank you, my friend. I appreciate you. That's where I believe the greatest returns are going to be coming over the future. I don't see a world in which bonds ever reset back to where it was in the 1980s, where you used to be able to get 15% on your bonds, y'all. Literally, just owning money, you could get like 15% on your money. That's crazy. That's crazy. Never gonna happen again. I don't think it's ever gonna happen again unless something really crazy goes on. Bracy Jr., thank you for the fires. I appreciate it. You have to start somewhere. Absolutely, says Willie Hess. I totally agree. Slow Trolling asked about DNN, but at first I'm going to talk about ADA and Polkadot first. ADA and Polkadot. So these two coins are Cardano and Polkadot. They're essentially the number two. They're the two competitors to Ethereum. Ethereum being a cryptocurrency that is specifically based around what is known as a smart contracts, and all that you really need to know about smart contracts is that it's a way to essentially build code in a decentralized manner and spread it over a bunch of different computers. That's what a smart contract is. And so Cardano and Polkadot are kind of trying to be the next generation of Ethereum, more than just a Bitcoin, which Bitcoin can only really be a store of value that's transferred back between each other, while in a Cardano, Polkadot, or Ethereum, you can actually build these new applications based off top of them. So Cardano and Polkadot are trying to position themselves to be people to take over from Ethereum or complement Ethereum, because Ethereum has a big problem right now that it costs a lot of money in what is known as a gas fee to transact on their platform. It's essentially just very slow, and the slower it is, the more money it costs to send your transaction across the platform. So that being said, what are we looking at Cardano and Polkadot? Essentially, they have a greater scalability, they're not going to cost as much fees, and they have better technology, allegedly. So Cardano and Polkadot are kind of the greatest competitors, and I think they are very safe coins. If you look at Cardano, for example, over the past week and a half, it's done the best pretty much out of every single coin compared to like Bitcoin especially. It has held its price and even gained in value compared to everybody else when everybody else was pulling back. So Cardano's very safe. I believe it's a little bit overpriced right now just because that happened. If you're the only coin that goes up and everybody else goes down, this is the cryptocurrency market. Things are very volatile. It's going to come back down again. But for as far as these for the long term, I wouldn't necessarily worry about it too much for the long term. I believe these are protocols that are here to stay and here to stay probably for a long time because they are getting so much adoption and support. Bought CTRM a month ago. It's only dip. You think it's going somewhere? CTRM, is that Castor Maritime? People have been asking me about that. That is Castor Maritime. Look, y'all. This is the same thing I've been saying before, and we'll talk about DNN in just a second. Guess where Castor Maritime peaked, y'all? February 11th. What also peaked on February 11th? All these other meme stocks that everybody continues to talk about. Nothing has changed for a company like Castor Maritime, right? The only thing that has changed is the amount of interest and meme energy. The meme energy is going down. People are not searching it as much as more. And the way to look at that, bought 300 worth of Cardano. Good for you, Ruby. I think that's going to be good for the long run, right? That's what I would look at it as. All my cryptocurrency that I've currently lost money on, I'm just telling myself it's going to be good for the long run, right? So it peaked, Castor Maritime, February 11th. So did all these other meme stocks. So the way you check for interest is first you want to index pages like Reddit and make sure, okay, on the Wall Street Bets, how many times are people referencing this specific ticker, but also because that's what Wall Street is doing. So you better do the same thing. And also you can use Google search trends, and you can just essentially search into Google search trends, and then it will come up, okay, you can type in a specific term and it will come up with how much people are searching that term. I bet, and I'm going to do this right now. I'm going to do Google search trends, and I'm going to search CTRM right now into it. And I bet you see there's a peak, in mid-February, and it's fallen way down right now. Okay, let's look at this. Look at this. That was February, right? February 7th, I believe this says. And where is the peak interest right now? Peak interest is right here. So, what does that mean? When you have these momentum plays, it is purely based off of how much energy and how much people are wanting to buy the stock. This is not something that I would recommend anybody getting into because I believe you're late to the party. I believe you're late to the party on this specific meme stock, and I would recommend, this is something I do feel strongly about, getting out, right? Because you can literally chart that thing to interest, and it will go up and down, right? So that's kind of what I want to talk about that. If money is a meme, it has the greatest meme energy of all time, says Schweinhund X. Yes, money is absolutely meme. And that's the thing. Like, the dollar bill, huge meme. It's just a meme backed by the US federal government and all of our tanks and all of our airplanes and stuff. That's all it is. It doesn't really mean anything except that we believe that somebody else is going to give us something for it. If I walk into a store with a dollar bill, I can buy a pack of gum for it. And that person can go, buy, whatever they want to buy for $1. which is nothing, a dollar cheeseburger from McDonald's, right? And everyone will agree it's the same thing. It is literally just a meme. I will say it now. I will say it forever. Money is a meme. Thoughts on Workhorse? Okay. And someone asked about Palantir too. Workhorse, y'all. Workhorse has been really hurting, right? Workhorse has obviously not done very well. 6 months, it's gotten wrecked. It was at $40, and guess where it peaked? Beginning of February, with all the other meme stocks. And now it's at $16. Why? They lost their contract with the United States Postal Service. I would say, so I don't know enough about Workhorse and their specific technology. This is an electric vehicle company. Okay, for those who don't know, Workhorse is an electric vehicle company that is essentially focused on the last mile delivery. So if I'm a Tesla, I'm focused on consumer cars, right? And building batteries. If I am a NIO or a GM who's trying to get into, I'm focused on that full consumer experience of the car. What a last mile delivery vehicle is essentially going from your local Amazon distribution center and like those vans that say Amazon on the side that are driving around everywhere, and then trying to replace those and send them to your house, or send the mail to your house from a local distribution center. So that's what Workhorse was trying to do, work on electric vehicles for the last mile delivery space. So what happened? They had announced, there was a rumor that they were going to have a huge major contract with the United States Postal Service. And guess what happened? That contract didn't come through, and this thing fell through the floor. I mean, from $40 to $16. That's awful, y'all. That's so bad. And for anyone who bought at 40, I'm very sad for you. I'm sorry. I wish that couldn't have happened. That's the danger of investing in these companies. And this is why they say, buy the rumor, sell the news, right? The news came out, they got whacked. And this is the danger of investing in a company like Workhorse. And, it was on the downtrend. And I was telling people here on these lives that it was already on the downtrend based off of meme energy rotating out of it. Meme energy on Workhorse was already rotating out. And here's the thing. Once a stock starts to lose money, you lose a lot of the meme. UX guy. Yes, it is. I'm trying to keep myself more in front of my PC so I can monitor. Oh, shoot. Oh, my gosh. So I can monitor this live video here that I'm trying to record. So I was already losing a lot because it was going down slowly over time, right? And once a meme stock starts to lose money, this is what happens psychologically. And this is very important to know. Once a meme stock starts to lose money, then you slowly get more people start to trickle out. And the retail investors who were boosting that up with the FOMO, or of course you got 23, I'm sorry, Ruby. Hey, brother, nice to see you, David Lee. Was slowly going down, right? If I'm looking from February 9th to February 18th, right? Slowly going down, you're losing this meme energy. And what's happening? Once people realize, hey, this stock doesn't go up forever, GameStop didn't actually go to the moon. And, there was a lot of things behind GameStop that because they shut it down, otherwise it probably would have gone a lot higher. But once people realized, oh, the stock can go down, all the people who have the fear of missing out are all of a sudden like, oh, I want to get out before I lose all my money. And that's what happens, and it continues to go down and down. And then you have less people interested in buying the stock again. So then all you have left is the long-term bulls. Bulls being someone who believes a stock or a crypto or whatever is going to go up in the long term. The ego crumbles as the meme energy leaves. New X guy, absolutely. So that's what you guys need to be able to identify. When you are hearing about a stock a lot, it is probably a meme stock, right? Apple is not a meme stock. GM is not a meme stock. Ford is not a meme stock. These big companies, Campbell Soup, Heinz is not a meme stock. But when you're hearing about a lot of these stocks a lot, there's probably a good chance, especially from people online, there's probably a good chance that it is a meme stock. And if you're looking, and this is the quickest way you can do analysis, and I please beg you, guarantee, please do this before you want to invest in one of these stocks. Check the Google search trends and check if the price has been on a decline and when was the spike. If it was in early February, this is when all these meme stocks had a huge amount of energy, and now these things are coming back to earth. Believe in Doge going to go up to the moon. Let's hope so, Ruby. Look, if Doge went to $100, I would be the happiest guy in the world. I want everyone to have free unlimited money, right? Like I want everyone to be rich. But we'll see, right? If you start hearing about a stock a lot, Probably too late to get in. Yes, it's very dangerous there, Nux guy. So that's kind of what I hopefully that makes sense there. Somebody asked about CCIV, SA John 76. Look, and this is finally going to be good because I finally am recording this thing and it's recording this time with audio. Rocket, how do I feel? Let me talk about Rocket first. I think Rocket's very interesting. And then I'll talk about CCIV because I have a full thesis on CCIV. Oh, and then someone asked about Palantir. I will have to answer Palantir before CCIV first because that was asked earlier today. So, Rocket. What's happening with Rocket? Rocket is getting GameStop treatment as well. It was 40% shorted. They had a really good earnings report come out. And I think that probably, because it boosted off the earnings report, probably caused a lot of more people to short it. Because people are like, hey, interest rates are eventually going to rise. And if you're a company like Rocket Mortgage, right? If you're a company like Rocket Mortgage, then, you obviously, when the interest rates are lower. So here's something you guys need to understand about the mortgage industry. You would think maybe, hey, interest rates are high, then that means that as the mortgage industry, I'm going to be making more money. Not true. Mortgage industry wants the interest rates as low as possible because that means more people are going to be actually initiating new loans because the money is cheaper. The higher the interest rate is, the less you can actually afford. Ruby Melissa, thank you so much. I appreciate it, my friend. So, Rocket has great earnings, special dividends. So that's what I'm trying to get. So for the mortgage industry, but you have to understand why people are shorting it, right? So, you actually make all of your money, Slow Troll, and thank you for the fire, appreciate you. So you actually make all of your money from the transaction fees on each mortgage originated. Because what they actually do is they sell those mortgages and package them together in a mortgage-backed security or CMBS to someone else, and that person collects all the interest. A mortgage company only makes money usually on the 1 or 2% of doing the mortgage. Doing the best I can, thank you for the fire. Doing the best I can. Thank you for the fire. Use Google Trends right now and realize that 80% of my portfolio is from February meme momentum. What the heck? Beer car, see? Look at that. That is a powerful, super powerful tool that you need to be looking at. And if your portfolio has been trending down, there might be a reason for that, right? So be careful. This is what I'm saying, guys. Be careful about the people who are on TikTok, on YouTube, pumping these stocks, right? Because they can boost the meme energy. BTS is the best 7. Hello, welcome back, my friend. So that's the danger, right, of people getting on internet and pumping these stocks. It is a real thing. So short squeeze on a good stock. People talking about Colorado Clark. Hello, everyone. Richard G. Nice to see you, my friend. I totally agree. For Rocket Mortgage, I think it's a good company long run, but I think right now, because it's going through a short squeeze, just like what GameStop did. I would not buy right now. I think the train is going to stop eventually, and so specifically, I'm not sure what I would target for Rocket Mortgage as an entry point because I haven't done that analysis. But I do believe a company like Rocket Mortgage they had great earnings, they had great revenue, and they're going to continue to do well over time. And I don't think the interest rates are going to rise as much as people think, which has scared the markets in general. But I don't think it's going to rise as much as people think, mostly due to the Fed, Jerome Powell being like, yo, I'm going to keep interest rates low as possible for the next 2 or 3 years, right? So that's what we're trying to do for Rocket Mortgage. Beer car, need to do better due diligence for your own sake. Yeah, see, that's what I want, guys. It is to empower you guys with the tools to do better due diligence for yourself, right? Because very few people talk about it. I approach stocks and investing in real estate investing from the angle of my job. My day job is to be a real commercial real estate analyst for a development company, and I look at all of the risks for a potential investment before I can make myself comfortable. So I don't want to call myself a bear, but I kind of am always trying to be as conservative as possible with my projections and think of everything that can go wrong, right? And if I can convince myself I can still make money if a lot of things go wrong, then I'm looking at investing. And I think that's a perspective that is valuable and needed when I think a lot of people aren't talking about that way. Thank you for sharing your knowledge. I appreciate it, my friend. Thank you. So, let's talk about Palantir real quick before we talk about CCIV. Palantir obviously is the Palantir is the company that does essentially they do big data stuff. They've done a lot of stuff for actually they've done a lot of stuff for climate change and mitigation modeling. But the biggest thing for Palantir is that they're kind of doing the associated time with the Cambridge Analytical type Facebook user data type stuff. Now, they're not exactly in that, but that's the type of stuff that they do. And what happened is that Palantir had essentially, and this is something to realize too, this is something that y'all want to be looking at in terms of both stocks and cryptocurrency, actually. And this is and what this is called is the essentially divestment schedule of coins or of stocks. And so what this means is if I have a stock like Palantir, and Palantir, I am fairly sure it is Palantir, and I want to make sure that I am not misquoting. Yes, Palantir had a lockup on its stocks. And what this means is for a certain amount of the executives, they had the ability, they're going to get rewarded in stock options, right? But those only they're only vested to them. They're only able to sell out of those stocks at a certain date, which happened about a week and a half ago. And when it did, a lot of people sold out. A lot of people sold out of Palantir. And that's why the stock crashed, because, and that's something to be watching out for. If you all of a sudden have an unlocking of the schedule of, let's say, and think about it this way in just terms of pure supply and demand. Let's say this stock has 1 million total shares, but 50% of the shares are locked up. Your experience on what you share helps a lot. Thanks. Thank you, Richard G. I appreciate you, my friend. Let's say that you have 1 million total shares of a stock, and 50% of those shares are locked up, right? And that means they're not trading. So actually, there's only access to 500,000 of those shares, right? But all of a sudden, 1 month from now, the CEO is going to get access to sell all of his 500,000 shares. Now, all of a sudden, you have doubled the supply, right? Even though you haven't actually doubled the entire amount of shares that exist, you've doubled the amount of supply that's available for trading. And and supply and demand, guys, right? What happens when there's a lot more supply? All of a sudden, there's a lot more risk that one person can sell off and drive the market down. That's what happened. A lot of the shares were divested. A lot of shares were sold. People like George Soros sold out of it, mostly because of ethical reasons. He didn't like George Soros is a big liberal guy. He didn't like all of the big data type stuff that Palantir was doing, and that's why he sold out of it. And for better or for worse, that's what happened, right? That was his reasoning behind it. So that is, once these shares came online, that's what happened. It was a big dip. Now, someone like Cathie Wood is this people like Cathie Wood because she has a specific set of investments called ARK, A-R-K, and they invested a lot of these future tech-oriented stocks like Palantir, and she made a big buy into it. Personally, I think Palantir is a little bit risky, mostly because still, while I do believe in data for the long term, I believe that there's potentially ethical issues for the same reason that George Soros set out, right? If you have a segment of the population that is never going to support you, that automatically reduces your potential demand. And whether or not I agree with him doesn't really matter. It depends on how many other people agree with him. And I think that potential is potentially high. And that's why I don't particularly want to invest in something. Someone asked about DNN. DNN is a mining corporation that owns a bunch of uranium. Is going to try to mine uranium up in Canada. So I'm worried about a company like DNN because even if uranium might be useful for nuclear energy in the future, if we can make it safer, there's always going to be a segment of the population that hates nuclear energy, right? And absolutely despises it. Which is just another risk factor of societal pressure that I personally, when I'm like trying to make my investments, I wouldn't get behind. Get rid of Peter Thiel, agreed. So, Peter has some strong opinions that do not need to be repeated here tonight. Anyway, AABB crypto backed by gold coming up. Don't know much about that. CRBP. So, hey, here's I don't know about those ones, Disha and AABB. CCIV, H-Town Bad Boy. I was about to talk about CCIV. Fubo. I've been trying to look into Fubo, guys. I haven't gotten there yet. But CCIV. let's talk about CCIV because this has been one of the hottest things, and I'm finally glad I'm going to be recording this here so I can clip this, I can put this on my YouTube channel, I can tell you guys to go watch it because I haven't seen a lot of people break it down this way. CCIV. What happened? CCIV is a special purpose acquisition company, right? A special purpose acquisition company essentially means it's a blank check company. It's just essentially a giant bag of money. You invest in this giant bag of money, and this giant bag of money doesn't own a company. It's just a giant pile of money, and it wants to go buy a private company and take it public. It buys a private company and makes it go public under the same ticker that it was trading under, right? So that's what CCIV was doing. And CCIV had a deal to invest in Lucid Motors. Lucid Motors is a electric vehicle company trying to target the high-end sedans, right? Trying to be a competitor to Tesla, trying to have even cars more expensive than Tesla's Model S. I believe the most expensive Lucid car is at like 150,000 plus. So that's the market they're trying to target. So why is Lucid important? Well, Tesla is obviously one of the biggest stocks right now and the biggest electric car stock and the biggest car stock. Rob Mart, thank you for the presents. I appreciate you, my friend. So for Tesla, and people are seeing Tesla's valuations despite Tesla dropping a huge amount. You know, Tesla's price to earnings ratio, y'all, is still 1,000 times, despite it dropping from a high of 800 to 680 that it is today. So people are like, oh my gosh, price to earnings ratio, way high. I can make that same sort of money in other electric vehicle stocks. This is what people in general are thinking, right? So this is why a company like Lucid is going to get pumped. This is why a company like NIO, that's only making, I believe, 80,000 cars a year, give or take, is, you know, competing and has a very similar price share, or it did until massive sell-offs recently, has a very similar market cap to GM. And so how many cars do make GM per year? GM cars per year. GM makes so they sell like 8 million cars a year in 2010. That's a lot. So a lot more than 80,000, believe it or not. So, and yet NIO, a Chinese electric vehicle company, it was only for the longest time trading about $10 billion below GM's market cap. So this is why there's so much people throwing money at the electric vehicle sector. So this is a very hot sector in general because people, and rightly so, know that the future is going to be all in electric cars. You know, countries around the world have banned the sale of new internal combustion engine gas-powered cars by like 2030, by 2035. It's coming. So that's why people are trying to invest in the future. So Lucid Motors specifically is trying to ride on that trend. What was the problem with Lucid Motors? Is that Lucid Motors was a SPAC, or rather being bought by a SPAC, CCIV, and that's always something that is very risky. A deal is not a deal until a deal is a deal. I will say that again. A deal is not a deal until a deal is a deal. So with Lucid, with CCIV, they had rumored to be purchasing Lucid, right? And it's always dangerous in these SPACs to have a value because the rumor might fall apart and the deal might fall apart. Until that money is transferred and all the contracts are signed, a deal can always fall apart. Take it from a real estate guy. Deals always fall apart no matter how much money is involved. They happen all the time. It got way overvalued what it has. So this is where I'm getting, right? So what happened when it came out? So to understand how to value these companies, you have to look at what a SPAC's typical share price is. So the typical share price for a SPAC starts at $10 per share. $10 per share, okay? So if you bought into CCIV when it first listed, you could buy a share of CCIV for $10 per share. And that is the price that CCIV, the special purpose acquisition company, is going to be giving to the company it is buying. Okay, so that's how the company that it is buying gets that money. It's at that $10 a share valuation. So CCIV was rumored to be buying Lucid Motors at a $12 billion valuation. Okay, so for $10 a share, you were getting a $12 billion valuation. So what was CCIV trading at its peak? CCIV at its peak was trading at $60 a share. Right? Let me see the exact date. It was at $60. It was at in mid-February, February 18th, February 22nd. It was at $60 a share. Okay, so that's where CCIV was. So if they're buying the company, CCIV is buying Lucid at a $10 per share to a $12 billion valuation, you, me, the average investor who's buying the share is buying a share at $60 a share. I'm not getting the share at $10 a share. You and I are getting the share at $60 a share. So what is 10 times 6? Equals 60, right? So there is a 6 times premium on that $12 billion valuation. 12 times 6 equals $72 billion. Someone saved you from the hype of CCIV said at $30 was overpriced. I've been saying that too, man. But let's finish out this thing, right? Product athlete. So 6 times $12 billion valuation was putting CCIV Lucid at a $72 billion company. And that's where I already was thinking this company is overvalued. I already thought it was overvalued. Why? Because CCIV Lucid this year is only set to make 7,000 or 8,000 cars, right? How is this company that's supposed to be making 7,000 or 8,000 cars be worth almost as much as NIO making 80,000 cars this year? And Lucid hasn't even finished building its factory yet. And you know, they only have 7,000 pre-orders or so. Like, it's not like Tesla where they had pre-orders out the wazoo and they're supposed to be competing with Tesla, right? So these are all factors that made me pause on Lucid Motors. I thought the fair valuation was closer to something like $50. I thought the fair valuation was $50 billion, which would put it in line with a Rivian, another company that has not started selling cars yet, but has been rumored to be valued at $50 billion. I'm like, I personally, and this is just my personal opinion, I personally don't think that the company is that much more compelling than a Rivian that is competing in a different space, has, you know, agreements with people like GM, and I believe they're going to be selling pickup trucks and then SUVs, markets that Tesla is further behind on, rather than Lucid, who's directly competing against Tesla in the luxury sedan sector. I just always felt that it was difficult to justify that valuation. So I was already saying, I think at a $60 share price, it is overvalued. What happened? What happened is that actually there was news came out for CCIV, and y'all can look. From February 22nd, it was at about $60. And then immediately next day, it fell to 35 and then fell to 30. What happened? They announced that they raised a second round of funding called PIPE funding, which is a way for private equity investors to get in to that SPAC before you can, before I can. So they can invest their money and get in a price before you and I. So the PIPE funding got in at $15 a share, which is obviously still way cheaper than me and you can get in. So these guys have made their money. But they got out at $15 per share at a $24 billion valuation. That's 2 times the amount of the original $12 billion valuation. So what does that mean for you and me? You might think, hey, this company is worth more. That's a great thing. It is not a good thing. You, when buying companies, when buying assets, when buying anything, you want to buy when the price is low and you want to sell it high. So when you are buying something with a high valuation, that means you are paying way more. So in fact, you're actually paying double the amount because it was originally a $12 billion valuation. It went to a $24 billion valuation. You are paying double the amount that you were expecting to pay before. And so guess what happened? That share price cut from 60 to $30. And actually, it's been trading up and down below $30, up down to 25. Part of the reason I believe that is, and you have to look at what is the $30 valuation. So what is 30 divided by 10? 3, right? $10 the original CCIV SPAC share price, but it's actually trading for 30. So that's 3 times. So what's 24 times 3? 72, which is the same as the 12 times 6, 72. So it's the same valuation given by the same investors, but you can only justify half the amount of share price because the company's valuation doubled. That's what happened. So that's what happened with CCIV. And also, I've been saying this for a while, is that I believe it's going to be trading under 30, at least for a while, because you've lost a lot of the momentum investors who were investing in CCIV because they kept seeing it go up and up and up and up. And you lost a lot of them. And that's what I think is happening right now. And it's why it sometimes hits 30, but then keeps dipping underneath because you've lost a lot of the meme energy that was behind CCIV. So, at its current price, based on my previous analysis, it's still at like a $60 to $70 billion valuation. I still think that's personally expensive, and I personally would not buy in. But for other people, I think other investors have priced it at a different way than I have. They're still targeting this $60 to $70 billion range, and maybe that's where it should be. And so now, if you want to invest in something like CCIV, I think a lot of the meme energy is gone. The terms of this deal is out. There's not going to be any more major news for a while until they start selling their cars. So, if you are buying to CCIV, you have to buy for the long term. You have to try to realize for yourself, where am I going to get in? What am I going to get out? What do I think the appropriate valuation for this company is? And you're going to have to do a lot more due diligence rather than just, oh, stock go up, I buy, stock go up, hopefully still go up. That is what I'm going to do. So do you think I'll go more down or up, Papacito, says Ruby? I think it's going to be hard to push it below 25 or so, mostly because you will have so many people who bought in higher who are like, oh my gosh, I'm going to either rebuy and, lower my dollar cost average for my shares, or I just think it's going to be hard to push it a lot lower unless a major piece of news comes out that says like, oh, the factory that Lucid is buying or building is like going to fall apart. Like that's the only really thing that I think is going to push it down way further. Otherwise, over the long term, I do think Lucid is a company that's going to succeed. See, this is another sort of analysis that I want you guys to be thinking about. Whether or not a company is going to succeed is very different from whether or not a company is overpriced, right? I believe CCIV and Lucid is going to succeed because Lucid has a lot of funding from the Saudi Arabian government. They have a previous Tesla engineer at the helm. I believe they can make a good car. NSIM, I appreciate it. Guys, selling tomorrow, you got it at 22. Hey, well, you still made some money. I think you can trade back up to 30, Ruby. I do think, it's consolidating kind of at 30 is where people are trying to push back up to justify that same valuation. So you might want to be a little bit more patient and try to consolidate at 30. But that's up to you. Because it has been trading up and down on 30, right? So that's kind of the long and short of the CCIV explanation. So hopefully that helps. Helion, your thoughts? Should I hang on to it at 1,400 shares? I think Helion. So Helion, the problem with Helion compared to other companies is that it's not as sexy because they're not they're trying to merge between not having full electric vehicles, right? They're trying to kind of get in the play and be the current bridge. I haven't done enough information and research into them to make a good recommendation on how's it going to compete in the long term. But I do believe that, in general, there's been a massive pullback in Helion. It didn't get any of the bump from the February meme stock. It only got a very marginal bump. I think that it's probably, and just based on what I've read about the founder's profile, and this is all I'm going off of. I've read like the founder's Forbes or profile that came out when Helion was first announced, and he was one of the self-made billionaire guys or whatever. I believe that it's probably going to be a company that's here for the long term. I don't have enough research or insight into their specific niche of the industry to recommend any sort of long-term strategy or price. Popseed, going to shower now. If you want to come up. Oh my gosh. Don't tempt me with a good time. Fubo killed earnings and dropped, but has 3 conferences coming up. See, this is something funny, guys. Fubo, or rather profits and earnings reports in general. This is the stock market is upside down. Sometimes you can have a good earnings report and the stock will go down. Sometimes you'll have a great earnings report or a terrible earnings report and the stock will go up. it's kind of a big crapshoot sometimes, and that's something to always watch out for. You're gonna have a lot of volatility whenever an earnings report come out, and it might be good, it might be bad. Genuinely, we don't know a lot. OBTEF, Space Hotel hopes in 10 years. Yo, that's kind of crazy, but I wanna look into that. Space Hotel, I'm down. I'm down to go, y'all. I'm down to visit. Who wants to come to space with me? Because I'm ready to go. Get me off this rock, right? Here he is. Thanks, brother. You're welcome, my friend. Thank you, guys. IPO OSCR. Don't know much about OCR. Easy SAT. Okay. So, where was I? Sorry, I lost my train of thought. My voice is hurting. I've been talking a lot. Something I need to train myself on to continue talking. SOS says I am Izzy. Thank you for the info. You're welcome. Oscar Health Insurance. Don't know much about Oscar Health Insurance. So SOS, ETFs like Buzz coming out. Thoughts? I generally like ETFs as a way to track a general sector that's doing well. Obviously, the Buzz is like kind of the meme stock sector. I don't have enough information about it to make a good opinion on it for you. If my kind of feeling of this specific ETF is that you're going to be really punished when momentum dies, and you're not necessarily going to be experiencing all of the other gains. If I wanted to be in meme and momentum investing, I wouldn't recommend leaving it to another ETF to be in. I like ETFs for other purposes, but and maybe I'm misunderstanding what Buzz is supposed to be about. But if I were to be in meme and momentum investing, I would rather be in a specific stock if I can get ahead of the curve, because I'm afraid that with something like this, that it's going to miss the boat a lot of the time. Meme stock sector, that should be their tagline. It's what it is, right? Isn't that what they're trying to do? I don't know enough about it. I will research more about it, because I think that is something that a lot of people are going to be asking. Air T Transportation, I did not, Prodigal Athlete. And I still need to figure out, how do I say that word? Prodigal. Prodigal pronunciation. I'm going to look this up. Your portfolio is finance, energy, and meme stocks. I mean, that's a good portfolio. Prodigal. It is Prodigal. There you go. So someone asked about SOS really quickly. I do want to touch on SOS. Look, guys, SOS, I haven't even looked at it, but I can bet you, let's see. Today is March 2nd. Yeah, kind of what I thought. So it traded slightly down today. Why? Bitcoin price was slightly down today. I didn't even have to look at it. It's been down to flat, right? So the thing about SOS is a company that is kind of trying to compete in this Bitcoin mining space. So I think a couple of the big names is Marathon, SOS, and Riot Blockchain. I think SOS has had the biggest meme energy out of all of them, but I would say that SOS is a company that I would recommend you guys stay away from, because if you don't know anything about SOS other than it mines Bitcoin and they bought a bunch of miners, then you need to learn a lot more about it. Because part of the reason why SOS fell a lot recently was that from its high peak during meme zone, February 16th. February 17th was its peak at $12. Fell as far to $6, right? That's half its price. Bounced up again recently. Because the problem with SOS is that they were kind of exposed. So first, they were losing momentum. Second, they were allegedly exposed by these short selling companies or these research companies that said that SOS may or may not be a Chinese shell company that doesn't actually own any assets and there's something shady. Whether or not that's fully true, I was looking into the report. It seems like the report may not be completely true, but there's definitely something shady with this company going on. And that's just something I would recommend you guys be careful with shady Chinese companies that have moderately credible reports that something weird is going on, right? Like, if I want to be exposed to Bitcoin in the Bitcoin mining sector, Meme Zone, the IPO of the meme sector. Yeah, I love that. If I want to be exposed to Bitcoin, why would I not buy Bitcoin? Why do I want to buy a company that mines? And the answer to that is, oh, you want to, and during the Bitcoin boom, you want to be selling to the company that owns the shovel. Or you want to be buying the company that sells the shovel, right? And during the gold rush, you want to be buying the company that sells the pickaxes. Here's the problem with the Bitcoin mining industry specifically, and I think it's dangerous to get into, is that if there are fixed costs for the Bitcoin mining industry. You have to buy your computers, you have to buy really expensive computers, and your electricity costs are always the same. What happens if the price of Bitcoin goes down and crashes? And there is a substantial risk. Now, over the long term, I believe the prices are going to go up. But in the short term, there's a substantial risk always in cryptocurrency that there's a major correction going to happen. If something happens, OMG, you have SOS. Ruby, come on. Hopefully you're profitable. Look, as long as you're profitable, that's all I care about. So if the Bitcoin price crashes, you still have to pay for the same computers and you still have to pay for the same electricity, but you're making way less money from mining that Bitcoin. And this can instantly turn your profit negative, right? That's the danger. It's not like selling shovels to a company. Look, it's not like whether the price of shovels is going to go up and down is going to hurt me that much. And, the price of shovels is pretty flat. Something like Bitcoin mining, the price is not flat. Price can go up and down a lot. And that's something risky. If I wanted to be exposed to that risk, I'd rather just own the Bitcoin. That's my personal opinion. Now, if I had to be in a Bitcoin mining stock, I would definitely look at Marathon over the other two. Riot Blockchain, for example, is another Bitcoin mining stock. They've been audited and I think fined by the SEC as recently as last year. That's kind of sketchy. SOS has this problem of being a shady Chinese company, and there's allegedly a lot of reports against them. And then Marathon is another company. I believe its market cap is pretty similar to Riot Blockchains, but it has 10 times the amount of mining capacity. So this is something you guys have to be able to do. See, and I am no expert in these industries, by the way, but this is the type of analysis. I'll spend 3 or 4 hours digging into something. I'll dig into, okay, what is the hash rate required to mine a Bitcoin? What is the price break-even point on profitability to mine a Bitcoin? What is the amount of machines they have? When are they coming online in a schedule? And what is their projected revenue going to be? And then let me compare that to what their current price per share is. And this is not super complicated analysis. This is something that everybody can do, right? You can look up Bitcoin mining calculator and try to figure in the hash rate. You just have to take the extra step in order to get there, right? This is what I want to encourage people to doing. I am not a Bitcoin mining expert, so there will be a lot of people out there who know, Andy, you're so full of crap. But I mean, I think this is a good place to start in terms of, hey, if I'm looking at this, what would I be looking at? So that's kind of what I think about SOS and all that kind of stuff. You're cute and smart. Unichan. Oh, thank you. Worse than this. Always upside down. XX 2 times. I am so sorry. If BTC crashes, at least I'll be able to buy you an NVIDIA 3080. Yeah. If Bitcoin crashes, people can get their computers again. Oyster Sauce 619. Thank you. I appreciate you, my friend. Thoughts on Brigham Minerals. I don't have any thoughts on Brigham Minerals. My first time hearing about it today. Joking about the meme stocks, Larry, just think of it as a sector. I know you said this before, Colorado Clark. Oh, that was, I already had talked about this. See, I'm trying to read this chat here up on my PC. Now that I have it, it helps me a lot try to think about it. Thoughts on Ethereum? Let's talk about Ethereum really quickly. And essentially, look, I think people are really down on Ethereum. People who are knowledgeable about the cryptocurrency space are really down or have been really down on Ethereum because they're saying, oh, the gas fees on Ethereum are so high. Here's what I think about Ethereum. The problem with Ethereum is that, yes, there have been some projects move off of Ethereum to other chains. But the thing with Ethereum is that they have a very strong, not only institutional investment space from the outside that's going to keep it up, but also they have the strongest community in terms of, you have to think about this. In the crypto space, there are only a certain amount of developers and certain amount of coders to work on cryptocurrency. Ethereum has the majority of them, or at least, I don't know if it's majority, but plurality, right? They have more than everybody else. And that means something. When people are used to something, it is hard psychologically for people to change. This is why a lot of why a lot of the stock trading companies give you a free stock to sign up, right? Because once you're locked in, it's hard to change because people and humans are lazy. It's easier to stay with what you know. And I think that's a lot of what's going to happen with Ethereum in the future, especially when Ethereum upgrades its chain to Ethereum 2.0. And essentially what that means is that they're going to be faster processing. They're moving from what's known as a proof of work to a proof of stake. In as many words, they're going to be faster in processing, which is going to solve a lot of their problems. And that's what I think that Ethereum has the money, has the capability, has the technology behind it to keep up. Now, are there going to be other projects like Cardano and Polkadot that I think are going to continue and gain some market share? Yes, but market share, I think the entire crypto bubble is, or let's not say bubble, right? The entire crypto pie is a lot bigger than people think. And even if Ethereum has less percent market share, I think it's still going to have a huge percent of the pie long run. Spoke on Workhorse, yeah, Philip Bryan, yes. Essentially, I think I don't know about Workhorse's potentials in the long term after lost its USPS contract, but I think all the meme energy is gone. The only way to invest in Workhorse now is in the long term. Because the only thesis for the meme energy behind it in the first place was that they might get the contract. Now, contract is gone. You have to think about it for the long term, and I don't know enough about what their specific business practices in to have any sort of opinion about investing for the long term. Any decent pennies I like? No, as Matthew. No, I don't invest in penny stocks, and I don't invest in these OTC securities that a lot of people are talking about. A lot of people were talking about HCMC last week, right? No, notice how no one's talking about HCMC today. I wonder. So strange. HCMC went way down, and nobody's talking about it anymore. People. I don't know if anybody was in the chat over the past couple of weeks. People have been like, HCMC, HCMC. Look, y'all, this is what happens with these penny stocks. These penny stocks are pumped and dumped all the time, and it is completely legal to do so because they are not regulated. And it's funny. I was like, y'all, I would be staying out of this. Optimus Boys, thank you for the secure the bag. I appreciate you, my friend. Always try to keep an upbeat attitude. Good for you. No one's talking about it. And look, the price is way down. I didn't even have to know. I literally have not looked at this stock since last week. It's way down. How did I know? Nobody's talking about it anymore. Right? These things happen. They're happening in front of your very eyes. These momentum meme penny stocks, especially, very dangerous. If you want to trade penny stocks, you got to be the first one. And you got to be in with the band at that right at the pump, and you can make a lot of money. You absolutely can make a lot of money, but you can also absolutely lose a lot of money because you sometimes don't know, are you guy number one or you guy number two who's going to be left holding the bag? So that's what I think. So if any of you guys have specific questions on stocks I may have covered already, this is finally going to be uploaded to YouTube. I am recording this video right now. It is recording. My OBS says it's recording the audio this time. Last night I recorded the video. I opened up the video. I'm like, I have an hour and a half of content. I can post to my YouTube channel. Great. Guess what? I didn't record the audio. That is sad. Q Lady, what is a meme stock? Well, we have some news for you. Have you heard of something called GameStop recently? Have you heard of something called AMC? Essentially, a lot of these stocks nowadays, and I think there's been a kind of a new revolution in trading over the past month or so, in which people have realized the ability of retail investors really to get in and pump and dump a stock. So, and Q Lady, that's not to be derogatory, right? I wasn't trying to be mean, but like genuinely, like this is the type of stock that you want to be thinking of. So GameStop, people realize, hey, we can all band together and do some gamma squeeze and short squeezing of all these short sellers and push it up just because people like the stock. Right? That is the analysis behind GameStop. Yes, people were like, oh, it might transition to a more digital services company. No. The analysis fundamentally for GameStop, if you go back to the beginning of February, was we like the stock. We like the stock. That is your analysis. The only energy behind it was meme momentum energy trying to push it higher. Everyone's saying, Diamond Hands, it's going to go to the moon. And the more people said Diamond Hands is going to go to the moon, the more people kept buying, the more the stock went up. That's what happened. So these stocks, a lot of stocks nowadays, especially in the technology, in the electric vehicle, in the marijuana sector, in these things that are going to be potential long-term high growth plays, are subject oftentimes to a lot of meme energy. And this is what I consider making it a meme stock. And because if you're all of a sudden pumped based off of this pure meme momentum energy, the will of the collective alone, that's what I would be considering a meme stock. You have 60 grand in Ethereum, good or bad. Matthew Fenton, obviously, depends on when you bought it. But look, I wouldn't touch that for years, man. If I had 60 grand in Ethereum, like I personally would leave it there and just move on with my life, and then expect to come back 10 years from now and have that thing be worth 600 grand. Unless crypto gets cracked down by the government, which is always a major risk, right? And this is why I don't recommend XRP, because of the government crackdown and potential SEC lawsuit against it. But that is really probably the only risk, that these cryptocurrencies are not going to be around in the long term, especially these bigger ones like Bitcoin, Ethereum, Cardano, Polkadot. The only risk is really government intervention, probably, like the most major risk. So that's something that I think I wouldn't even worry about, and just hold on, right? Like, I believe, and you have to ask yourself that question. Do you believe it's going to be worth more 5-10 years from now from today? When there are more people adopting the cryptocurrency, when there are going to be more use cases, when you have more and more young people who understand cryptocurrency investing, when you have more and more people who try to get away from these big financial institutions that can often screw us and try to go to something towards decentralized, do you think that it's going to be worth more? That's a question you have to answer for yourself, right? But I know my answer, and that's why most of my crypto plays, I'm not really planning to make money in the short term. I'm planning to make money in the long term. Now, you can make money in the short term on crypto, absolutely, because it's so volatile. But, most of the times I've tried to do so, I've lost money. Gonna be transparent. I'm not the best trader. If you guys want to learn about crypto trading, there's a lot of other people who talk about it. But that's what I'm saying. It takes a lot of effort to do trading and a lot of knowledge and time, and I'm not the biggest expert in it. I try to identify things that I think are going to be good for the long term, because that takes way less of my brain energy. And I don't have all the brain energy in the world to be watching the cryptocurrency markets bounce up and down every day and get scared and like get super emotional every time it goes up and down 10%, because that happens every single day, right? So that's kind of where I am on the cryptocurrency. Can I give a quick breakdown on the reasons behind my Stellar crypto? And Burkhart, if you're stuck holding a meme stock and holding for long term to get your money back, an only option, I'll say that first. I would identify if you think that meme stock has any value beyond just the meme, if it has long-term potential. And this is what I would say. If you want to trade momentum and meme trading, trade in a stock that you can convert to a long-term position in the future. Now, you might not have had that luxury, and these stocks might not have long-term potential. And then you have to say, okay, is there any chance for this to rally over the next year or so that I can cash out even at a lesser of a loss? If not, if this company fundamentally was always kind of a disaster company, like an HCMC that people had been asking me about forever, which HCMC was this kind of non-profitable grocery and vape store in Florida, right? Doesn't have a lot of long-term potential. If it's something like that, that is sometimes the time when you have to cut your losses and move on. You have to watch all day long. If you move a second to the toilet, you can use time prodigal athlete. Yeah, so I don't necessarily have time for that, and I don't think a lot of people do either. It's boring to watch numbers all day long. I honestly hate numbers. Anyway, I believe PFE will come up. PFE. I'm not sure what PFE is, but I do want to answer quickly what my interest in Stellar is. Stellar, I like Stellar because I believe it is best positioned to take over from Ripple, or be like kind of the number 2 to Ripple. And I'm not super interested in Ripple because they have the lawsuit from the SEC, the Security and Exchange Commission of the United States, against them. And Stellar was founded by one of the same guys as Ripple, but years later, and I believe they've resolved a lot of their problems. And so before, Stellar Lumens had the problem that it was inflationary, and that there would be more coins added every year, which is obviously a problem for supply and demand. Well, they removed the inflation, so now there's a limited supply of coins, which is great for supply and demand purposes and price growth purposes. And also, the thing about Stellar is that they're actually been poaching a lot of the relationships that Ripple has been having. So one of the platforms on Stellar actually formed a new relationship with MoneyGram. MoneyGram being And this is to back up and saying Stellar and Ripple are both essentially in the value proposition of being payment transferring services, and it's for like remittances and global payment currency, global payments. Think of like a Western Union, but way cheaper. So MoneyGram, type of Western Union type product, is kind of backed away from Ripple and is working with the Stellar based product because there are coins and different products on the Stellar ecosystem, kind of like you would think about how there are different things on like a Polkadot ecosystem. Not a perfect comparison, but that's kind of a very rough analysis there. That's why I like Stellar. I've lost money on my Stellar trade so far because I was trying to get in and do a swing trade, and that was one of the ones I targeted, and I messed up, and the thing crashed. But I'm not worried about it. Because I bought at 465, and this is be completely honest, I've said it before, I bought at 465. It's less than that now, but you know, it's only at like 40 cents. And over the long term, I believe it's a coin that I believe will go up. Now, you know, are there probably safer ones? It's just one I really kind of got attached to, and I really thought it had some good research behind it, and I thought it would go up in the long term. Well, it went down in the short term, but I haven't sold out. I could sell out, lose a lot of money, but since I believe it's a long-term play, then I'm just going to sit here and hold and not worry about it anymore, not check the prices going up and down. Literally, I'm just not going to worry about it because otherwise I'd get emotional anxiety from looking at it every single day and being like, oh, I'm in the red, I've lost money. It's okay. It's okay. Because I believed in the long-term potential of it, I tried to do a short-term trade, didn't work out, I'm converting it to a long-term play. Isn't the Feds using XRP platform for something, Prodigal Athlete? They may have been looking at that before, but I think currently a lot of the XRP stuff is on hold. So that's what I think about XRP. I just think if I'm looking at a cryptocurrency, why do I have to look at one that has an extra layer of potential lawsuit from the federal government against it, right? If I want to buy a coin that could potentially moonshot, why not buy one of the other 100 coins on the list? You know, there's so many altcoins. You know, why do I have to buy the one that has a federal government potential sanction against it? You know, if they get slapped with, and now, do I believe they'll probably win that sanction? Yes, but you know, that extra 5 to 10% risk that they lose, not worth it to me. Just joking. Sorry for the losses. Down 50% from P&D and want to believe. Yeah. These meme stocks are dangerous, y'all, and trying to do momentum trades is dangerous. People lose money all the time, and I hope the people who aren't losing money, who haven't lost money, are hearing from everyone else who has, me included, and say, hey, this is not all sunshine and roses. But, you know, a lot of people who are new as well will hear that and say, I should never invest in the stock market. It's going to go down forever. I'm never going to make any money. That's also not true. You have to invest because otherwise, in the society we live in, owning assets is the only way to financially free yourself, right? That if to have financial freedom, to have financial independence, you have to own assets. And buying stocks, buying real estate, buying cryptocurrencies are great ways to do that. In fact, really, pretty much the only ways. Have I played around with NFTs and stuff like that? I have not. I'm trying to learn more about NFTs. NFTs being non-fungible tokens. It essentially just means fungible means it's interchangeable. Non-fungible means not interchangeable. So these NFTs are on blockchain technology that cryptocurrency runs on, but currency is meant to be interchangeable, right? NFTs are not meant to be interchangeable. Essentially, it's just digital collectibles, like you have a specific signed card. Anyway, lots of people are doing NFTs now. Like Logan Paul, I think sold his NFTs for millions of dollars, I believe, just to his kids on YouTube. So I have some thoughts about Logan Paul selling merch gang to all of his children. But but people obviously are valuing these things very highly. I don't know how you and I can make money off of it yet, because obviously a lot of the people making money off of it is just celebrities selling stuff. But it is definitely something to watch out for and something that's going to continue into the future. Because look, a physical collectible, if an NFT is just a digital collectible and it's just something that's unique and can never be replicated, it's the same as a physical collectible. Just like cryptocurrency is the same as pretty much real paper money, you know? Like, it's, if you believe it's worth something, it's worth something. Money is a meme. Value is what we assign to things. The more you understand that value is meaningless and arbitrary and only has value because other people assign it value, I think actually the easier it is to make money because you start to realize, like, oh my gosh, literally nothing means anything. Anything can be arbitrary, and people only value things a certain way because everybody else values it a certain way. So it could potentially change, but it's hard to obviously initiate that change because people are set in their ways and have inertia. But it can potentially change. And the more you understand that nothing really makes any sense, I think the easier it is for you to suspend your disbelief and just be like, oh, no one really knows anything about what they're doing. And, I might as well try to educate myself the best I can. If I just know more, look, I don't have to be the smartest person in the entire world. I have to be 1% better than average, and I'm going to be making money over the long run, right? That's where I'm trying to be. If you can be the 51st percentile, it's so complicated. Don't understand crypto, blockchain, and mining. It's so complicated, and not just crypto, stocks, and why real estate is valued the way it is, and why stocks are valued the way it is. It's a bunch of BS. A lot of it doesn't make any sense. Like, people try to compare. For example, they're like, oh, we're in a bubble, we're in a bubble, we're in a bubble. I think absolutely we're in a bubble asset-wise in terms of prices, very high. Philip Bryan, value investing, yeah. But the thing is, value investing is only value investing if you believe that your definition of value, you buy something that's undervalued compared to what other people think. So at the end of the day, even though you're kind of contrarian, your contrarian position is based off of what other people think. So it's still, at the end of the day, everything is based off what other people think, right? Think about people talking about a bubble. I absolutely think we're in a bubble. I just don't think that bubble is likely to pop anytime soon because people try to compare. Oh, let me look back to the Great Depression, y'all. At the Great Depression, the price to earnings ratio was only 22, and we're at like 30 something right now. How can you do that? And I'm like, do you really genuinely, are you sitting here and telling me that part of your analysis as a day job, you like gonna sit here and look at me and say, the Great Depression's economy has anything to do with today's economy? Like, that's the type of stuff, like, I think that as far back as you can really look in terms of the new form of the economy that we're in is probably the dot-com bubble, because anything pre-internet, you obviously have a very different set of investors, like retail investors, like people buying on Robinhood and stuff. And you have way more communication. You have way more access. Things are just completely different. Like, why would I ever look back? So anytime someone like does historical analysis back to 1920, I'm like, y'all, I don't really care. I don't really care what happened in 1920. I think it is completely irrelevant today. And people are like, oh, the past repeats itself. Yeah, maybe. But the markets change. The only reason why people talk about it is because other people believe that other people believe they talk about it, right? We could theoretically set a new paradigm that the price to earnings ratio should be at 30 bucks, and that's average. Doesn't mean that it will be, doesn't mean it has to be. But the reason why everyone thinks it's so expensive is because they think that everyone else thinks it's so expensive. So, is that going to change necessarily? No, but it is something to keep in mind that a lot of times people who are the most confident in their beliefs often, might be not having the correct perspective. I try to say, it's like, I really, my fundamental thought about myself is that there's a lot of stuff, I don't know jack about jack, right? Like, generally, we're human beings. We don't know that much. And it's hard, the more you come to accept that yourself, that you don't know much, I think the easier your life is, and the more, the better it will actually be for your investing journey. It keeps you humble. It keeps you making sure I'm trying to learn more, and I'm just trying to be slightly better than average. I'm not trying to be the biggest genius. Completely different economy based on the one on the gold standards Apple to Cass. Yeah, after Bretton Woods agreement is gone, it's completely different, right? So the way that people look, and look, we have something like cryptocurrency now, where we literally have $1.5 trillion of market cap into cryptocurrencies. That is just literally a fake token, right, online, that all of a sudden people have assigned $1.5 trillion total worth to these fake tokens that are not even backed by any government. Did anyone think that was going to happen even like before 10 years ago? No. What is the Direxion Daily Small Cap Bear 3x ETF? Lord have mercy, I have no idea. But I think this is a good 01001100. Oh no, some binary code. I'm not ready for it. So I think this is a good place for me to call it, y'all. Voice is tired. I've been talking for about an hour and a half now. So I appreciate y'all coming by, as always. Hopefully, just made money. Yeah, got some fake digital, fake digital stuff. Colorado Clark. I appreciate y'all coming by as always. Hopefully you've learned something new. Hopefully you enjoyed the content that I helped you out today. Gave you some new, different perspectives about investing, about stocks, about different things. Q Lady, thank you for the hearts. I appreciate you, my friend. I will be back tomorrow, sometime between 9 to 11 Central Time. XXS 2 times. Thanks often, and so I appreciate you, my friend. Thanks, Doracy Mine. I appreciate you. Be back tomorrow, sometime between 9 to 11 Central. I will be posting this video to my YouTube channel. Colorado Clark, thank you for the presence. CJ Mellinson, you missed it. I'm so sorry. I'm posting this to my YouTube. You can find my YouTube link in my profile if you want to go watch this. I'm going to post this whole thing there. This time I actually recorded the audio, so hopefully that's going to be working. NSIM, thank you for the bag. I appreciate my friend. Love the advice and opinions. I appreciate you guys. Thank you so much. Philip Bryan, thank you for the support, y'all. So, if you want to go to my profile, I'm going to post all of this to my YouTube channel, so hopefully that can start helping more people, because I do tend to explain the same topics over and over again, like CCIV, like Doge. So hopefully I can be like, hey, go watch this video, I explained it. So this is to save me time, and we can talk about more different things, right? So look out for that. I'm going to be trying to edit it and put that all together and put that uploaded tonight. And I will see you guys tomorrow. Tomorrow should be a better day, and thank you all for your experience. Richard G17, I appreciate you, my friend. Y'all be safe. Much love to you. I hope you guys, wish you all